All right, let's jump into things. Where we at? 10:35. Actually, give us a quick refresh here. 10:35 on 9th of July. So Wednesday, halfway through the week. And look, I'll start off a little bit with look. There's not a great deal of news in that. Obviously, the big shocker yesterday was RBA, which you know what I mean. Like I'm much heavier a technical trader than a fundamental trader in that. But even I've sort of sort of been going, oh, look, the unemployment rate's stubbornly strong, like, stubbornly low, which is good. CPI's right back in there, which is great. But I think it caught a lot of the market off guard. And this is the thing with these sort of predictions where they're sort of saying, look, 95% of the economists are saying that it's going to be going this way. It's if people are so heavily fixated on one direction, and then that happens, the reaction's kind of like, well, yeah, we kind of thought that was going to be the case anyway, and that's what happened. And obviously, it puts the risk and the shock and that to the other side of it all. So coming out basically holding it at 3.85 in that, I think caught a lot of the market off guard, myself included. And that sort of really sort of Aussie obviously push up a little bit. But I think the press conference was interesting enough with it all. And I noticed like that she re-emphasized Bullock, re-emphasized endlessly that it's about what was it? Where it's about timing, not direction. So yes, cuts are coming. Uh, just about whether they're going to do it now or later. And on that, as she was saying this, I was like, I remembered at the start of the year, or towards the start of the year at least. And she was sort of saying that one of the requirements they wanted was two quarterly CPI figures within the band. And as I think at the moment, they've only got the one. And obviously, we have one coming out very soon, shortly as well, before next rate decision. So 6 weeks, I think it is, till the next one in August. So, it is kind of sticking to what her plan was, or what she sort of said initially at the start of the year or towards the start of the year, whenever that was, of waiting for those sort of two quarterly figures to be inside the band to sort of basically sort of give them a little bit more assurity that CPI is going to sort of stay lower because it is moving in that right direction. And the monthly one, I thought it was a bit cheap that she sort of just discredited this monthly CPI because as in like, oh no, well that's what it is, 2.1%. I don't really believe it's that. Well, if you don't believe it's that, you need to change the formula to show it so it represents what it truly is. That's just my opinion with it all. You can't sort of like say, oh, look, this is the number that's come out, but even I, as the head of the Reserve Bank, I don't believe that number. What's Joe Sixpack supposed to be doing down the street? So anyway, look, it is what it is. It held. We saw Aussie spike up, but even later in the session, and this is what I've been saying. Look, we could have, you know, I don't know if you necessarily call them all hawkish, but I guess it was a shock hold. So I guess that is more hawkish than moving into that sort of more double sort of cuff kind of idea of it all. Um, but then as soon as US dollar started to run, well, what happened to Aussie? It completely undid that whole move. And it seems to be sort of bounced a little bit, but it's really just sort of at the moment hanging just above. I think it's sort of so it was at 65.15 when they had the rate decision, 65.27 now. So really not changed at all. So all that, in my opinion, and I'll show this a little bit more when I get to the chart, is it's just delayed the inevitable that US dollar is most likely going to run, and if it does run, that's going to sort of uh, lead to a little bit of cooling off in the Aussie. But I'll get to this more when I get to the chart. So that was a big sort of bit of news sort of through yesterday in Asia. And as I said, this whole week is really just a little bit quiet. There's not a great deal sort of going on. Overnight, no, look, isn't anything that I can really sort of say, hey, look, this is a big sort of mover for us. I guess you got your consumer credit here. It's quite a big sort of miss to the downside, but it's not really something I sort of pay attention to. Coming through this session, we've got CPI and PPI from China. So where's this in 40, 50 minutes or so now? We were looking here, looking to be fairly flat with it all. I would say there's maybe a little bit of a non-mover. And then, of course, a rate decision from New Zealand where they're tipped to sort of hold as well. So New Zealand went a lot harder and they've cut a lot harder. So they've raised it harder. They've taken a different approach because Bullock was like, oh, yeah. And I understand, but I mean, look, end of the day, this is your job. She was like, "Oh, we can't win. You know, we put it up, and then sort of we didn't cut as hard as everybody. We didn't sort of hike as hard as everybody else, and now we're not cutting as hard as everybody else, and all this sort of stuff." And it's like, well, okay, anyway, whatever. Point is, we've got New Zealand coming out at 12 o'clock. I don't see this as being a massive, impactful sort of thing across the market unless they again sort of add some sort of shock into it all. Um, After this, got RBA speaker at 3:30. This might be a bit interesting, actually, sort of given everything that sort of happened yesterday. Excuse me. A big thing that Bullock was going on about was sort of like that, the people that made the decisions, because they actually, for the first time, came out with something a little bit similar to what you get in from the Bank of England, whereas they sort of gave a bit of an insight as to how many board members voted which way. And I think it was 6-3, but of course you don't know who voted which way, whatever. So six in favour of a holding, three in favour of a cut. And obviously, majority rules with that kind of thing there. So it's very similar to sort of kind of what you get with the BOE. Um, so it'd be interesting, yes. Where was I saying this Hunter guy? So it'd be interesting to see what he has to say here. This could be something that could actually move Aussie a little bit. So I'll mark this one down, send an alert for this one as he comes out and speaks. And then through the rest of the session, again, just nothing. As I said, this whole week is a little bit quiet. We got the Fed minutes and that 4 a.m. tomorrow, but I don't think this is going to offer anything sort of super insightful that we haven't sort of seen before. Um, yeah, pretty quiet on the news front there. On the data front, anyway. The news front, though, that's the big mover one. So let me just find this article. Boom. So this is the big sort of bit of news, so to speak, in that. And this absolutely sent copper flying. 200% on pharmaceuticals. This is obviously the part that sort of burns it there. 50% on copper. Oof. Look, I do copper at the end, but just to show the reaction of that. Where's it go? Where's it go? Where's it go? Bang. 17% in a 1 hour candle. Actually, like that's 30 minute. No, look at this. It's pretty much instantaneous. There you go. You got to get to the 5 minutes. So 5 minute candle from these lows down here to the top over here, 17%. That is massive. I'll get to that more with the charts and that. But yeah, so basically, sort of obviously, sort of Trump sort of coming out playing hardball. God knows where Albo is in this whole sort of thing, and that most likely not doing much at all. But yeah, geez, it's really sort of smacked the market around. So this was the big sort of bit of data and news overnight. It seems to be pretty much isolated to copper itself. ASX itself is taking a little bit of a hit this morning. Possibly more from the pharmaceutical sort of side of stuff and that, because if you look at sort of Rio and FMG and these kind of things here, where we go, I've got them on this other thing. If we go, BHP's just ticked down now. But if you look at these here, I mean, Rio, FMG, look, these things are fairly not really sort of phased at all. There's a percentage movement change here, not really phased at all. So I think it's pretty much more just isolated to just sort of like, as a copper in what sort of I'm trading. But ASX is obviously so taking a bit of a bath here as well. So I think that's down, what's it down, about 50 points or so. Finding a little bit of support now. All right, look, so that's pretty much it. So not a great deal to sort of report there. So we can jump onto the charts, go for DXY. So DXY, now it's sort of coming up here, it's really sort of testing this breakout point here. So if we get back onto a reasonable time frame, this is a 4 hour. This is that little sort of recovery channel that we've been seeing. It's actually been trading very well through this whole period here. You can see that sort of like, each level where you expect the sellers to be coming in, they've stepped in on cue. So, bottom of the support, tested, bang. NFP, tested, sold down. Came up here, again, moved through, closed the gap, sold down. Back, and now this big sort of grey sort of horizontal, sold down. So you want to sort of see this thing obviously sort of continue through. I thought we actually may have got that breakout last night. I'm still looking for this sort of move up through this zone here to then sort of pretty much sort of be targeting closing of this gap with the top side of this channel. that it's kind of been sort of running on since it sort of sold down. What's that, sort of like start of May or something like this. So it doesn't mean that it's necessarily okay, we're in breakout territory, but it does sort of mean that, we could see a little bit more sort of upside in this move before maybe it's a little bit more cooling, and then sort of see what happens with the US dollar over there. No doubt there'll be a perfectly timed headline or something of this sort of matter that can sort of get shunted along. But this is what I was saying yesterday. We're about sitting around here, and I'm like, look, it's looking good. It had the RSI. I can't remember, maybe on the hourly or something. I was watching it. It's around this point here. I'm like, look, this looks good for it to sort of come up here and sort of pop through here. It had the RSI in its favor, but got through, and then obviously bang, failed when it needed to push through there. So it'd be interesting to sort of see what they do. We've got actually had a slight little gap up today, which is a bit different because, as you can see, all these little gaps, as small as they are, we've just been gapping down, gapping down, gapping down on open every single time. So a small little gap up is a little bit of a change. Let's see what happens if it does come back and sort of close this gap. I mean, only a dribble down. It's only 10:46, so we haven't even really got that sort of early volume in yet. But should they close this gap and then start to move it up, so take out that little open high, if we could sort of close this little gap here, albeit sort of like, what is it, like 52 down to 51, so 1 point gap, but it is still a gap. I know I like these gaps to be closed. Close that gap and then sort of actually go through that sort of spike high that we just saw an hour or so ago. It may sort of open it up to see a little bit of a run through here, because that's just a little bit of a change from what we've seen for quite some time. If you look at all these gaps, I suppose we had a gap up here, didn't we? Boom, and then sold into the next day. But the majority of these gaps are gaps down. So, it's just a little bit of something to note. May mean nothing, but, it's, again, just a little bit of a change in that sort of potential price action. But still, it remains at 97 point, call it 85 or whatever now. And then we could see a little potential sort of move up towards above 98, and a little bit of a squeeze up into this zone over here. But we'll have to sort of see how that happens. Asia has been a little bit quiet recently, so we'll just sort of see how this sort of plays out. Downside wise and that, I'm not really looking for sort of US dollar weakness other than sort of little short pullbacks, as you can see through these areas here. But if you got underneath 97.20, then I might sort of be a little bit sort of cautious that this was just a little bit of a sort of a rally effort, and then maybe back down over here. But I still think that we have some upside to go with US dollar here. I think it's just really burning off a little bit of this overbought status, and we'll probably just see a little bit more, at least one more of these pushes up to this top end over here. I think it's a magnet to sort of close that gap. Move along. I'll have a look at Aussie. Geez, Aussie, what a shocker. So obviously we hit those three targets that sort of I put out last week. Let's get onto something that's a little bit more cleaner. Maybe this chart here. And you can see that this support really sort of held through here. What I was sort of looking for, and I think the market obviously was looking for, potentially that cut, was to sort of continue this move down here. And look, excuse me, this trade is still valid. The idea, if you break these supports through here, that you come down, you test these supports down here, move down over here, and that's still the trade. So look, should we get some sort of US dollar rally pushing up to that sort of top side there, I imagine Aussie's going to come under pressure as well. And these are the levels that I want to sort of see break. I want to see it down underneath sort of 64.80s. Test that 61%, so only about a 30-point move down there. But the bigger sort of trade for this one here, where I think will be this move. If we sort of give up this sort of 61% level of this sort of bounce move through here, then I think sort of a move down to the 90s. And as I said, look, that's the thing. 90s and 60s are reoccurring levels constantly. It doesn't mean that they're going to hold forever, but even as you can see, coming down here into the 90s, that's a pretty good hit ratio. Bang, 70 points back up. And this is where the data came out yesterday. So it came out, as I said, 65.12. Moved up here, consolidated. US dollar starts to run. Aussie gets smacked. and we bounced up, and really we just bounced up into a little sort of consolidation here. So could be pushing up here, could be moving back down, and that we've got to sort of wait to see. As I said, I'm still in the idea that we will sort of move to the downside, but you know it has been stubbornly strong for a long time, for recently, last couple of months and that. So, you know, could see a little bit of a drift up to the top side here. But again, it's just really what's happening with the US dollar. I don't think it's really people are going to go, yep, that's great. Let's buy Aussie, particularly now that you've got this sort of 50% tariff placed on top of what's happening with um, copper and this sort of as much as the sort of pharmaceutical sort of play into stuff as well. It's still quite a large sort of tariff to sort of smack on there. But for the all in all, it doesn't really seem to have sort of phased Aussie much at all. So yeah, I think sort of probably for some direction here, if it is going to move up, you probably want to see a close above 65.50s. But I would say downsides probably more the direction we will see sort of play out. I mean, this is still technically putting in lower highs on this pullback. But as you can see, it's just sideways at the moment, which is obviously just a market indecision. So we'll see what they do with the US dollar in the short term. We'll just have a quick look here. Yeah, look, I mean, there's a small little support, 65.07, but I'd say above, yeah, 65.50 top side, and for a larger move, underneath 64.80. I don't think I don't think sort of China data is really going to be doing it. I don't think the RBA is going to be doing, RBNZ is going to be doing anything. Not that that's obviously affected with Aussie, but you know, there's a little bit of a proxy flow with those sort of matching pairs. All right, move along. We got gold. Gold traded beautifully yesterday. So I was on the short side, actually, sort of for one of the longer holds for me in that sort of all through the session. So I got short. I think it was a 34 yesterday, so around this zone just over here, and it actually traded very well. So it's the downside of having about 8 charts here. This is the one that I was using. So it's short from this level over here. We broke through, and structurally this just worked beautifully. So you can see that this was the move up that we had when we were coming close to the deadline of, you know, 9th of July, tariffs. We know tariffs is a big driver for gold. And then that got abated. That got sort of pushed off. And that's like, oh, hold on, wait. Kick the can down the road. Yep, that's right. We're going to be going to the first week of August or something. I think 1st of August is now sort of what they're looking at. And gold, bang, undid that whole move. And structurally, you can see that this moved very well. It broke through its little rising trend. Not that this was a super trend or anything like this, but the horizontals took it out, back test, target the lows, continuation. And the continuation came very strong through here. I got out a little bit early. I got out around this area over here, which is still a decent bulk of that move. And as you can see, it's bouncing back up into that zone now anyway. But the point is that you know, these things, once they start to move, it's funny. It's sort of like you say, why do you trade sort of US sessions? Because you can see the you can see the difference. This is Asia, and yeah, well, this is Asia here. Um, you know, it's moving in sort of what, sort of 39, 28, $11, $11 kind of thing over however many hours, what, 10 hours or something, or in 2 hours. Trading US, you go 28 down to 86, $40. You know what I mean? Like that's the reason that you trade the US sessions and that, particularly with these things. There was a point a while ago, obviously, sort of like when China was coming in and buying everything up, and we were getting 50 buck candles. That was insane through obviously through Asia session there, but that time seems to have abated for now. So look, I think sort of downsides probably most likely where we're still going. Again, I think US dollar, if that starts to push up, is going to be the one that sort of gets this thing over the line to maybe break a couple of these key levels. But as you can see, into the 80s again, 80s has been, 3280s has been a bit of a strong sort of support area. Should we get onto a higher time frame here? We are sort of coming into a bit of a rising support through here. So look, I think 80s, as I said, has been a bit of a support area that we sort of had recently. But really, you want to see underneath 32.45. 32.45, I think, will sort of really open the door for some more downside. And I think you'll see a lot more people talking about, hey, gold's about done at this point, or maybe are these things overvalued, yada yada, this kind of stuff. So this is the chart that actually the better chart that I've sort of been using with it all. Interesting with this, I'm not a big fan of this particular falling resistance, but it does seem to keep bouncing on it and holding it on the downside here. Um, as I said, nothing that I feel is actionable off that. But as you can see, this is that sort of 3280s level, which has shown up time and time again. Buyers giving it another shot through here. So I think sort of if we could sort of get down and take out those wick lows, that to me you'll probably see, obviously, up and down speed humps, but I think you'd be targeting, 3130s, 3150s, these kind of levels down here, which, is a pretty decent little drop off if you look at where we go from here. So if you take out those wick lows, you're still looking another 3%, 90, call it $100 from that sort of wick low down to probably possibly sort of next price target supports, which it comes in line with obviously those lows back in May. But it's also kind of that sort of technical measured move from that 3 drive that was sort of traded into the what's it called, latest Middle East situation, call it that. I don't know. I mean, the market moved on from that pretty quickly, but that was a great sort of trade because we had that wedge set up. We had the negative divergence. You can see it better on the daily chart, I think, how we go here. So I put some annotations in actually yesterday, which I thought sort of was good because it sort of shows this point is, this is what we moved on the tariffs. Second effort, as we always say, pull back, find support, attack the highs. Bang. We know this is where the sellers were. And then the initial tax just got it to that level. They said, great, chance to sell it here again. US bombs them, does nothing, and we dribble back down. So look, I do think we have a little bit more downside here. I think this little bounce coming up here is probably a little bit higher than I would have thought. But look, as I said, as it did come up here, what does it do? It comes up and takes out all these highs here, all these technical stops, and then dribbles back down as here as well. So yeah, the downside definitely the way to go. I think sort of if we can get down underneath those sort of 85 levels, we can call it here and have a bit of a continuation down. But certainly if we take out the wicks, put another alert on that there, if I've got any alerts left. Where we go here. Last stand wicks. I don't know what that is as it goes off and that, but yeah, certainly that'll be the confirmation, in my opinion, that you'd be going down here. First of all, body fill 31.74, wick fill 31.35, but certainly it's still a good trade, definitely to possibly look at adding a little bit of weight underneath these areas, because this is the thing as well, just with these large bounces here, people sort of go, yeah, cool, break underneath this support here. It was a nice little close down. Maybe I'll chuck some weight on this one. Bang, up here, stopped out. Okay, now we can run it down. So it's all just that sort of little mind game with it all. But yeah, for the time being, I'm still looking downside. I'd like to see sort of continuation of this sell downs through here. Underneath sort of 85 would give me a little bit more confidence that at least first next target would be going down to fill those wicks. Silver, still not really doing much. It is kind of like, I was like, maybe a head and shoulders. No. Maybe it's sort of like, break up over here. No. Like, again, it's just consolidating these highs over here. And these red lines here are 14-year resistance zones, like the top of the wick and maybe the body fill kind of thing. And look, it is consolidating up the top over here, but the more it stays here without going up, and the idea that US dollar may get a little bit of a run soon, I mean, it hasn't yet, but it could, leads me more to the idea that we could potentially sort of see this as distribution. We're coming into the top of this wedge. We're going to get something pretty soon, I would say. I think you either need to sort of like commit to the top side, or people are just going to go, nah, screw it, and they'll get out to the bottom side of that. And ideally, look, a target sort of on the bottom side here is 31.37. Yeah, 31.70, back at the 61% retracement where we've got these sort of supports, plus minus a couple of cents kind of thing. But again, this is why I've got this marked out here. That's still almost close to a 10% drop off. So we're not necessarily going to get the same meltdown as we broke when we broke that wedge in April. But certainly, I think if you do see this is a distribution area and we do see it to start to move down, I don't think people are going to be so quick to jump back in, as it drops down a buck or two. Well, half a buck, $2, whatever. I think you're going to see a fairly decent sort of continuation to the downside with it all. So again, still on the sidelines with silver, but underneath 35 or a break of this wedge is where I'll probably actually start to take a little bit of a position on this as well. Fly along. This is copper. I'd already sort of covered copper before, but with those tariffs, that is massive. I mean, that's new all-time high, isn't it? Well, it's certainly past all these other all these other highs. That's insane. That is absolutely insane. So copper, it's another one I've been on the sidelines. I know I'm still taking this as a win, even though I missed it. I didn't partake in this at all. But I mean, I'm not there to sort of predict when they're going to drop some kind of news like this. But the idea was obviously to try and get back down to this 38% fib of this bounce move from back in April, whatever. I said, look, if we could get down under here, that's fine. I'd be happy to try and maybe buy it down over here. And for the time being, it was looking like it. I mean, this was about a 4 or 5% sort of pullback through here. But I was sort of saying, look, it's just too strong to short. You know what I mean? This is the kind of thing. Sometimes you're like, oh, look, I want to buy it here. Well, why don't I just short it down to that level? Well, because this kind of stuff is a great example as to why you don't. That's 17% in what I cover, like 10 minutes or something, 5 minutes that it moved. Like that's just insane. Like nobody's standing in front of that. That's everybody just liquidated, like out. So look where it is at the moment. So I missed this one obviously, but that's okay. Still see what happens from here. It's more or less sort of consolidating up around the top over here, which I think sort of probably bodes fairly well for it in the medium term. It certainly hasn't sort of been like one of the ones that we've seen previously with those highs, where it's been these kind of highs here. Uh, this looks like a tiny candle compared to that, but this was still 3% in like 2-3 minutes, and that was like a capitulation, which sort of obviously you could see the end result after a capitulation. I mean, this part was April, but still this pullback through here after a capitulation. This, if we can get back to where we are, does not seem like that. And not only is it sort of flown up 17%, it's still consolidating out the top side. So yeah, I think till you see something sort of some sort of resolution, you could see it this at least sort of finding a new little range at the top side over here. But the fear with these sort of things as well is that I don't think the tariffs. I think he's just talking the tariffs. I don't know if he's actually done it or not. And what if they go, oh, okay, we've struck a deal, and no, we won't put the 50% on. Well, in theory, you're going to see this thing come back down pretty hard as well. Maybe not necessarily as hard as it sort of flew up through there, because obviously fear is a factor with it all. But the downside here, yeah. Anyway, so the fear with this is potentially that, as I said, they sort of come out and sort of say, hey, look, you know what, we're not going to sort of be putting this tariff on, and we could see a little bit of this move undone. So back onto the sidelines with this one here, pretty much just sort of waiting out and sort of going, look, see what happens with it all. It's as I said, it's pretty isolated to just copper. Aussie hasn't really reacted one way or another from this. None of the other metals, obviously silver, gold, they haven't been impacted by this kind of stuff. I know the tariff's not applicable to them, but sometimes when you see some things move, you get proxy moves as well. I've seen ASX took a little bit of a clipping. It's testing its local supports, sort of first supports in that, but seems to be holding a little bit. As I said, with those more local companies, very unfazed by this sort of stuff at all. So something's got to be dragging ASX down. As I said, I don't really sort of follow any sort of pharmaceutical companies in that. So maybe I'll have a look around sort of see, because obviously there's got to be something dragging that part of the market down there as well. All right, and finally, just on China. So this, as I've said a couple of times, this is the chart to be paying attention to, because this has just been in such a snoozer grind for quite some time. But again, higher time frame. So on the daily, we've got the wedge, the negative divergence, and the sort of coming off the horizontal supports. So negative divergence, obviously, that's like sort of my favorite sort of turnaround sort of setup. But if you can combine these with a confluence of three, then generally you can see some pretty good reactions. And just to sort of show as an example, if we go back, have a look at gold quickly, this is where we had negative divergence, rising wedge, both of these things that we've got on USA China on the yuan at the moment, and then coming off in this case resistance. So as I said, this ticks exactly the same boxes that we saw with China 2 seconds ago. You got the wedge, the negative divergence, and in this case resistance. But if we go back over here to China, obviously we're looking to move in the other direction. So instead of resistance, we've got support, negative divergence, wedge, and support. It's broken out, back tested, put in a new high. It's starting to move here. And this is why I say this is an important chart to pay attention to. Coming up into 720 is going to be vital. A break of, 720 is where it's going to go. Break of 720 is going to be vital. It's got the alert set up there. If we see this start to move and break up through here, next target we're looking at is 722, these previous wicks, which is the bottom side of that big range that we were in for 3 months. Should it break through there? Well, this is the thing. If you're sort of trading Aussie, this is a great proxy for Aussie. Technically with this, I haven't even done this on here, but let's say that's the move, that's the wedge there. That's your measured move. That takes you back up 724, coming very close to filling. Do we have, look at that, we've got a gap there as well. So that'll be gap fill. Let's just mark it out. That's that gap on here. It's on a different chart. Oh, no, that's right. That's a, I had it on the other thing, didn't I? And just, gap, bang. So that's the gap fill up over here. Let's just put this bit up over here and that, because you want to see it sort of come right up. Fill the gap over there just so it doesn't take up the whole chart. But that's your sort of measured move, given this sort of setup. Now, measured moves aren't sort of necessarily like that's it, that's the end of the move, but it's definitely a target that could close the gap that we saw back in May, start of May, and which is basically what are we coming up? 2 months, 2 months to the day now. We're not there yet, but 2 months ago, that sort of gap was open, never closed. Measured move takes you up, closes that gap. That's a great target. That's where you sort of go, okay, look, you know what? Should we sort of get a break of 720? Look, 722 is going to be a sort of a speed hump along, definitely in the way. But that's kind of where you want to sort of see it move to, and you will see a reaction once you come to this area here. It's a little bit tough with the yuan because it is such a sort of controlled currency by the PBOC. Like they're very involved in sort of moving it. And look, for better or worse, it's not too bad because it keeps it very stable, as you can see. Not great as a trader because it just snoozes along, but certainly, as you can see, it's broken, backtested, and moving up through here. So I think, look, this is definitely still something to keep an eye on, particularly if you're trading Aussie. I think this is a great indicator of sort of what US dollar strength is doing against obviously more sort of the Asian sort of currencies. I know this is just against the yuan, but still Asian side of things, which obviously Australia is basically bundled in with the Asian currencies a little bit, and it doesn't get muddied by maybe sort of euro or sort of the pound, these kind of things that can make up a little bit and distort DXY a little bit. So while you're seeing sort of DXY sometimes be a little bit iffy, this can be a good indicator, particularly if you're trading Aussie with this one as well. So it's certainly looking like it wants to go a little bit higher here. 720, if that alert goes, bang, it wouldn't want to. I wouldn't want to be, and I'm not long Aussie based on that. All right, that's it for a mate.